Hey traders, this is Mike Sir here. Welcome back to my channel. In this video, I'm going to talk about a topic that I believe isn't talked about enough, and in my opinion, the most important aspect in becoming a successful trader. You see, most traders only focus on how much money that they can make in the financial markets, but what successful traders realize is they can't predict how much that they can make. Now, what they do is they choose to focus on what they could potentially lose when a trade of theirs doesn't go in their direction. Now, what I'm referring to is risk management. So in this video, I'm going to share with you how I manage risk on every trade that I make and give you some ideas on how you can minimize risk. So let's get started. First off, let me tell you that minimizing risk should be your number one priority in trading. So once you're in a trade, your focus should be on do not lose money rather than how much you can make. As I said, the biggest reason is we can control how much we can potentially lose. So let's just say, for example, you don't want to lose more than $100 on a specific trade. So once the stock that you bought goes down $100, then you sell. But let's just say you want to make $100 on the stock that you just bought. Can you guarantee that the price will go up $100? Well, what if the price doesn't go up and actually goes down? So you see my point that you can't control how much money you can make. Since there's no guarantee that we as traders can make money, then you should only focus on trading with risk capital. Now, risk capital is money that you can afford to lose and that won't affect your lifestyle. So if you trade with capital that you can't afford to lose because you have to pay rent or you have to buy groceries, then you'll end up trading scared and therefore will not make any logical trading decisions. Also, you want to make sure that you preserve your risk capital because let's just say if you lost 50% of your risk capital, then in order for you to get back to break even, you need to make 100% on your capital, which is definitely not easy. Before I discuss how much you should risk per trade, please stick around to the end of the video as I will pick one stock, I'll analyze the chart, and then I'll use my risk calculator to determine how many shares I should trade. Okay, so once you're focused on not losing money, then the next thing that you want to know is how much you should risk per trade. Now, many traders wipe out their accounts before they actually have a chance to make many trades. So it's very, very important to minimize your risk per trade and determine the following. What percentage of my risk capital should I risk per trade? Now, there's no right or wrong answer as it will basically depend on your risk tolerance. But what I would say in terms of guidelines is you want to risk 1% for conservative traders, 4 to 5% for aggressive traders, but generally on average, 2% risk per trade is quite common. The next question you should ask yourself is, how many shares should I buy or sell? Now, this is obviously going to determine on your risk, but I'll show you in my risk calculator shortly. The next question that you want to ask is, what is my stop loss price? Meaning, what stock price do I get out at if the price doesn't move in my direction? For this, you might want to identify a price below a specific support price level if you are buying a stock, or have a certain percentage from your initial entry price. But this obviously would depend on how volatile each stock's price is. The last question that you want to ask is, what is the maximum dollar amount that I'm willing to lose if the trade doesn't work out? Now, this is calculated by your percentage risk per trade multiplied by your risk capital. Now, I'll show you this in the risk calculator next. Now, let's go through the risk calculator that I have created in Microsoft Excel. So this is a risk calculator for stocks or ETFs, and it basically involves 5 steps. So step number 1 is enter in your capital. So let's just say $10,000 here. Step number 2 is enter in your percentage risk per trade. So in this case here, let's just say 1% for conservative traders. Step number 3 is enter in your entry price. So let's just say $10. Step number 4 is your stop loss price, which let's just say again $9. And step number 5 is when you're going to take profit. So let's just say $20. Once you enter all these 5 steps, it will basically spit out 3 key things that you need to be aware of. So the first thing here is here's your risk amount. So if this trade does not work out, you will lose $100. So how is this calculated? This is basically $10,000 times 1%. That will give you $100. Here's your profit target price. So if the price goes from $10 to $20, you will make $1,000. So how is this calculated? It's basically 20 minus 10 and the number of shares here, 100. So 10 times 100 would give you a profit target of $1,000. So in this case here, if you were to put on this trade, you would essentially trade 100 shares. Now, if you guys like this risk calculator and you guys have Microsoft Excel, I will include in the description. You can download this for free. Before I show you a trade example, please take a moment to like this video. I would really appreciate your support. Okay, let me choose one stock and I'll show you exactly how I manage risk on this trade opportunity. So here's a chart of Plug Power. And just looking at this chart here, I see an opportunity. So what I'm going to do is I'm going to draw some lines here and identify this opportunity. So we see a kind of a basing right here, this little channel here. And it's basically going sideways here. Let me just zoom in a little bit more here so you can see here. And what I like in terms of this trade is I'm looking to buy right here around, let's say 28.50. And if it doesn't go in my favor and it goes below here, I will exit at about 24.90. And my profit target that I'm looking for is probably, let's just say $35. Actually, no, let's just say $34.90. I usually like to sell before a whole number. So let's enter all this data into the risk calculator. So here's the risk calculator. So for step 1 and step 2, you don't need to enter in. So let's assume that you have $10,000 risk capital and you're looking to risk 1% on this particular trade. So all you need to do for step 3 to 5 is enter in the details. So what we said is that we're looking to enter into the trade at $28.50. Okay, and if the trade does not work in your favor, we're gonna exit with a loss at $24.90. And then the exit price, if it reaches our target price, we were going to take profit, which is $34.90. Okay, once you enter in all the information, you just need to focus on these 3 areas. So on this trade, you are looking to risk $100 if the trade doesn't work out. And if the trade reaches the target price of $34.90, you will make $177.78. And on this trade, you'll be buying 28 shares. So the key thing in terms of this risk calculator is you want to look at this thing here. Now, what I like to prefer is for every dollar that I risk, in this case $100, I want to make at least double that, so $200. So in this case here, it's kind of below that. And what you need to do is you might need to increase this exit price. And if you feel the exit target price can go higher, then let's just say we feel that it can go to $40 by, again, you have to look at the charts. Then you can see here that if the trade works out, you make a $319. So it's kind of like a 3-to-1 ratio. And so this is definitely a much better trade. But again, in terms of your exit target price, you definitely need to take a look at the charts and see where the major resistance levels and sell before that. Thanks for watching. If you like this video and want to watch other videos where I show you all the tools that I use on a daily basis to analyze the financial markets, please click on the left for more videos and click on the right for the full playlist. I'll see you in the next video.